Hey traders, do you want to build a simple algo? Well, stick around. I'm champion trader Kevin Davey, and that's what we're going to do. Well, welcome everyone, and let's talk today about creating a simple algorithmic trading strategy. Here's our disclaimer. Past performance is not indicative of future results. Treat all results as hypothetical. You can lose more money than you have with trading, so watch out. Alright, so my goal with this video is to kind of demystify the world of algorithmic trading for you. To kind of make it a little bit easier to understand, and so you won't be as scared about it. You might not want to do it if you're not doing it right now, or maybe you will, but at least you'll understand it a little bit. So we're going to talk about what is a trading algo. I'm going to go over advantages and disadvantages of algo trading because it's not all sunshine and happiness. I'm going to build a simple algo for you and just kind of show you how it works and show you a little bit of the valuation. And then I'll talk about some of the next steps that you can take if this kind of appeals to you. All right, so you know, the big thing with algo trading, algorithmic trading, whatever you want to call it, most people hear that and they get scared. You know, algos, you know, they start running for the hills. And that's not how it necessarily has to be. But people see things like this, where a brokerage lost 440 million in a few seconds because they had a software glitch. And back in May of 2020, when oil went to negative prices, a lot of brokers' systems couldn't handle it, and traders were stuck. They couldn't get out of losing positions because the price was negative. So there's definitely some fear out there. And in fact, I've even experienced it earlier this year, and there's a YouTube video out on it. It's called Prevent Algorithmic Automation Disaster, because I had an algo that kind of went crazy late one afternoon, and it bought and sold the micro mini ES. I think it did like 300 orders in the space of I don't even remember how long, a minute or so. It was really quick. It was just in and out and in and out until I finally turned it off. But that does happen. So your fear is justified that if you think algos are crazy, but you know, usually you can fix these things before you go live with them. And that really is the fundamental problem. Most people think robots, computers, and they think about things going wrong. And if you remember the old TV show Lost in Space, there was a robot on there whose arms would flail around. And it's a good example of how algos in trading can just kind of go crazy. So you got to watch out for that. So I understand the fear. A lot of people have fear with it. But if you do things correctly, I think you can eliminate that, or at least minimize it to something that's acceptable. So what is algo trading? You know, what does it look like? Well, here's an example where if the close is below the average close, the last 5 bars, I go long, and the opposite, I go short. And so you can kind of see the blue and red arrows for buying and selling, and that's all this algo is doing. And so you can create an algo on anything. You know, it could be stocks, could be forex, could be futures, which is what I trade, could be crypto. You could even do it with options if you have the data. It's just rules that tell you when to get in and out of a market. Here's an example of a more complicated one where you actually use the UTY index to drive signals in the 30-year bonds. But again, it's just rules, and it's just buying and selling a particular instrument. How you do it? Well, that's the fun part, the challenging part, and the tough part. It's not so easy to come up with algos, but it certainly can be done. So really, to kind of simplify it and kind of demystify it a little bit, algos are just a set of rules that tell you when to trade. Okay, that sounds pretty simple. The neat thing about algos is once you create those algos, you can backtest them to see how they worked historically, and you can automate them if you decide to trade them going forward. So you don't have to be stuck to a 5-minute chart and watching for, oh, if this bar closes higher than the other one, it's my entry signal and I got to enter really quick. No. You can have an algo do it for you. And that's the nice part about it. Now, I've shown it as being computerized. It doesn't necessarily have to be computerized. You know, somebody who's sitting at a table calculating moving averages by hand, and then that gives him a signal for the next day. That's algo trading because he's using a rule to base if he should enter or exit a trade. And then, of course, you've got PhDs and all sorts of high-level people at hedge funds creating these enormously complicated programs and some simple programs, but they're all algo trading too. So a lot of people are doing it, and it's no reason to be intimidated by it. All this is just rules to trade by. Okay? And I'll show you an example in a little bit where we'll build a simple algo to trade Amazon, and we'll see how it works. Okay, so there's definitely advantages and disadvantages with algo trading. Some of the advantages, you can test the rules for yourself. So this is a big one because you don't have to rely on some guru or some person masquerading as a guru to say, oh, here's what you got to do. You got to follow this price action method. Well, does it really work? I don't know. You know, unless you see that person's account and see it grow, you don't know. But with algo trading, you can test the rules for yourself. And as long as you've set up things correctly, and that's a big if, I get it. But if you set things up correctly, you have your answer. And you can believe it because you've done things correctly. And that gives you a huge boost of confidence for your trading, which is really important. Well, next, if you can create one algo, you can create 5 algos, you can create 10 algos. The sky's the limit, right? Especially if you're going to automate them. You don't need to be entering orders manually. You can let the computer do it. And that's cool because you can also diversify. So with futures, for example, I have soybean strategies. I have I have cocoa strategies. I have coffee strategies. I have lean hogs. I have live cattle. There's the live. I have all sorts of ones. And I have currencies, energies. I have a wide array. And that allows you to be diversified. So maybe the metals complex is going up while the grains are just kind of ho-hum, you know, up and down, not really doing anything. So you can diversify. And that's a great advantage. And the big thing, if you do it yourself, if you create your own algos, if you do it correctly, once you start having some success and start to see, oh, hey, these algos work, you will have more confidence in your strategies. And that's huge because all of us hit drawdowns, right? Drawdowns are always going to happen. And being able to withstand a drawdown is big. And the way you do it is partly with confidence. You have confidence in what you're doing, and then you know that drawdowns are usually temporary. And that's a nice feature to have. As I mentioned before, you don't have to be glued to a screen watching the 5-minute bars. I've heard people who spend from 8 a.m. in the morning to 4 p.m. in the afternoon and don't even have a bathroom break in there because they're just glued chart trading. With algos, you don't have to do that. You still have to monitor your algos, but you don't have to watch every tick of a chart. The next big advantage, you're in control. Let's say you want to make an algo that doesn't trade on Tuesdays because Tuesdays you go to the gym all day or something. Well, just create an algo that doesn't trade on Tuesdays. If you don't like to hold the weekends, create an algo that doesn't trade on the weekends. Back when I was in the working world, I made sure my algos would only make signals in the evening for the next day. So I didn't have to worry about the algos while I was at work. So you can tailor your algos to do whatever you want. And that's a huge advantage, especially for people who aren't full-time traders. The next thing is you don't stress out about every entry and exit. You know, you're not going to be worried, well, is this really a valid entry signal? Hey, you let the algo tell you, because its rules are programmed. It either is or isn't. There isn't a gray in between. And so that relieves a lot of stress off the trader. Of course, there's disadvantages too, right? I mean, it's like I said, it's not all sunshine and happiness. The key thing, it's really easy to screw up when you're developing algos. And I'll talk a little about that in a little bit. But it's really easy to do things the wrong way. And you can actually make things worse than if you had no algos. Okay, so you got to watch out for that. Remember I mentioned at the beginning of this video, past performance is no guarantee of future results. That's huge. So on the one hand, we're back testing because we want it to be profitable. But on the other hand, we're trying not to rely on that. And you could be saying, well, wait, you can't have both. Well, you can. You just have to balance the two. So you use the past performance to give you comfort, but at the same time, you account for the fact that it might not be the same. But that's an advantage of algos. A lot of people think whatever they back test will keep working forever, or even a year from now. And it's not like that at all. So the next disadvantage, when people are building algos, they can't resist making another change, to make a better back test. Again, it kind of goes back to that past performance. People keep trying to improve, and you just can't do that. That's just a dead-end street when you try to make a better and better back test. Go to my website. There's an article on creating a better back test that will, I think, be eye-opening for a lot of people because it's a big danger. The next disadvantage is a lot of people can't do it. They can't turn decision making over to a computer. They always want to redo something and overrule it. You know, they just can't resist overruling their strategy. And that's a big no-no with algo. Because look at it this way. You just went and developed an algo, you tested on all this data and it worked good. Now you start trading live and you start changing the rules. Well, why did you even backtest, right? It's kind of silly. The next one is a lot of people think, hey, I just set up this algo, let it run, walk away, come back a month later, and I'll be rich. And it's not like that at all. One, the exchange says, hey, you got to be supervising your algos. You can't just let them run crazy. And two, there's a lot of little things that come up where you have to be there to address it. So there's rollovers, there's internet outages, there's platform shutdowns. There's all sorts of things that could happen. So you've really got to be on top of it with your algo. Now, that doesn't mean every single tick you watch, but you do have to monitor it. And that's a disadvantage, especially if you trade overnight. The next disadvantage, it takes a lot of hard work to succeed. And it shouldn't be a surprise, right? But a lot of people, you'd be amazed how many people I talk to who think, hey, trading's easy, I want to start doing it. I get emails every week from people who claim, oh, it's going to be easy, just tell me what to do, I'll do it. Trading is not that easy. It is hard work. Because if it was easy, everybody'd be doing it, and there'd be no money in it. Pretty simple. So, with all those advantages and disadvantages, think about yourself relative to those, because algo trading is not for everybody. Some people like staring at a chart. And they might do better actually at it. I was the opposite. I could not discretionary trade to save my life. I was terrible at it. I found I was a lot better with an algo system. Everybody's different. So you have to weigh those pros and cons and see. And it's not for everybody, so don't feel bad if you say, oh man, this is not for me. Because it's not. Okay, so we're about halfway through. Can you show me some love? I would really appreciate it. And what I mean by that is, if you like this video so far, give it a thumbs up. That encourages me to make more and to do more instruction. And of course, if you haven't already subscribed, subscribe to my channel. You'll be notified when new videos come out. And if you want a free algo, just go to my website and sign up on my email list. And you can also use, it's kjtradingsystems.com, kjtradingsystems.com, and you can also click on the link in the description for this video. Okay, so should you consider going algo? I gave you the advantages, disadvantages. I've told you it's not for everybody. But here's some simple questions. If you can answer these, you're probably in good shape. Can you follow the rules exactly all the time? If you can't, Algo's going to treat you rough. Can you develop a strategy properly? Do you know how to develop a strategy properly? It's not as simple as just throwing some indicators on a chart and then optimizing. So you got to know how to do things correctly. And then, can you resist tinkering with the strategy? So let's say you have a nice strategy. Can you resist trying to make it better? A lot of people can't. And then finally, does the thought of making a whole bunch of strategies kind of excite you and you think, wow, this will be really cool, even though it's going to be really frustrating at times? And it's going to be terribly frustrating. I mean, there's times where even, I've been doing this for years, where even I walk away from building strategies because I just can't find anything that works. And take a day off or a week off and do other stuff. Then I come back and then usually I'm refreshed and can start developing again. But it's hard work. And if you can't handle it, just know that up front. And, don't even try it then. Okay. So let's say you've looked at the advantages, the disadvantages, and you've answered those questions on is it for you, and you've decided, hey, this is for me. I think I can build algos. I think I want to build algos. Let's do an example. Let's see. All right. So first we're going to need a trading platform. We have to do something that can test our ideas and eventually automate whatever we're doing. We need an instrument we're going to trade. We need an idea we're going to test. And then we can get going. So first one, need a trading platform. I use TradeStation. And a lot of my students do too, because for one reason, as of 2020, I offer a rebate program where they can actually get my workshop for free by opening a TradeStation account. But there's plenty of other options. Okay, there's NinjaTrader, Multicharts, Thinkorswim. People use Python, Excel. Even by hand, some people do it. So there's a lot of different options. So I don't want to say, hey, this is the only option. This is the option I use, and this will be the rest of our example. We'll use TradeStation, but there are a lot of different ways and a lot of different platforms that you can test and automate with. Okay, so we need an instrument to trade. I'm just going to pick Amazon. Normally, I trade futures, and people always ask, why do you trade futures? Why not stocks? Well, futures, you can get a lot of diversification. You can get great tax treatment, especially if you're in the U.S. compared to stocks, short-term stocks. And the reason is because of long-term and short-term capital gains. I mean, with futures, I can actually hold a futures contract for 1 minute And if I make a profit, a certain percentage will be considered a long-term capital gain. I know it's crazy. You think, how is that? That's the law. But I like the tax treatment. I also like the leverage of futures. You can hold a lot more of the instrument because of leverage. Of course, it works both ways with leverage. It's a double-edged sword, but if you do it right, the leverage can really help you. So I use futures. I'm going to do an example with Amazon stock, but you can create algos for anything that can be traded. So just keep that in mind. Okay, so let's build an algo. So the next thing is I need an idea to test, okay? So let's just say I live in Cleveland, Ohio, which is where my little head is right there. And I want to go west to Los Angeles, okay? So I have to go through Chicago and on to LA. And I'm going to take a train, okay? So if I'm going to take Amtrak in the US, that's the big train, passenger train thing. Am I going to take a train first to Chicago, or am I going to take a train to New York? Okay, and you could think about this and be like, well, why would you want to travel to New York? That isn't the direction you're going. Well, that's where this idea comes from. If you're going to get on a train and you want to go west, it makes sense to get on a train that's already going west, right? That is trend following. Okay, if I did the opposite, if I went east, hoping the train stopped and turned around, well, then I'd be kind of counter trend, right? Because the trend is going east, but I want it to stop and change because I want to go west. So I'm going to use this as my idea. I'm going to trade breakouts in the direction of the current trend. Pretty simple. And I always find that the simplest ideas work the best. So I think this is a good one. Okay, so here's an example. I'm going to use a breakout, and I'll show you the code in a second, a breakout of 50 bar close. So I compare today's close to the last 50 bars. If it's the highest close of the last 50 bars, I go long. Here's an example. And you can see to the left of it, the price was always below there. So once it got to the highest price of the last 50, I bought the next bar at the market. Here's another example where there was another breakout high, and then I bought again. So pretty simple. You're just buying higher highs, basically. And then on the sell side, I don't want to ride it all the way down until it's the lowest close of the last 50, so I'm going to divide that by 3, so around 16, 17 bars. I'll exit if I'm at a lowest close. And I'm also going to exit after I've been in a trade for 50 bars. So there's an example exit right there where I hit the lowest close of the last 16, 17 bars, and it exited, in this case with a loss. So that's my whole strategy. I code it up unbelievably simple, right? There's a buy condition, a sell condition, and then there's an extra sell condition for the number of bars I'm going to be in a trade. So let's see, how does it work? Well, I can tell you first, I chose 50. I mentioned that for the length. I did not optimize it for anything. I just picked it, and then a little later I ran an optimization just to see where it fit. Well, it wasn't the best profit, it wasn't the best drawdown, and it wasn't the best profit to draw down. I mean, it was one of the better ones, but it wasn't necessarily the best one. And I think that's good for the future performance. So let's see how this actually works. On the left, we have buy and hold. So we're going to buy at the beginning of the period and just hold it all the way to the end. And on the right, we're going to have our little breakout algo. And you can see they look similar. They both make money. They both make quite a bit of money. But the breakout algo has some flat periods where it's not even in a trade. And it has less drawdown, but it also has less profit. So you gotta ask yourself, which equity curve would you like more? The buy and hold has much higher profit. So if you're just looking for profit, you probably want to do buy and hold. But it's 100% of the time in the market, which, all things being equal, you want to be in the market as little as possible, right? If I showed you two strategies and one was in the market 100% and one was in 70% of the time, if they had the same performance, you'd choose to be in the market less, right? Because the less you're in the market, the less chance you have of getting derailed by some crazy event. And that does happen. So the breakout algo, on the other hand, has a much lower drawdown. It does have much lower profit, but it also has much lower drawdown, and it's only in the market about 50% of the time. So that's pretty nice. So how do you tell the difference between which is better? Is it better to have more profit or less drawdown? I don't know. So I use Monte Carlo analysis. It's a simulation technique. You can get this spreadsheet for free at my website. You can try it out. You put your trades in there, or in this case I put my weekly trade results. And here's what I get. And I have the slide out of order here, but buy and hold has a return to drawdown of 1.98, which is pretty good. But the breakout algo is even better, 2.32. So the higher the return to drawdown means you get more money back for every dollar of drawdown you have. So the breakout algo is definitely better in this case on a risk-adjusted basis. So profit basis, buy and hold wins. Drawdown basis, breakout wins. Risk-adjusted basis, breakout wins. You have to decide which one you like. Most people go for the risk-adjusted return. That seems to be a better way. Okay, so we just built a simple algo, tested it, compared it to buy and hold. Hey, it looks pretty good. What do we do now? Okay, well, I just kind of alluded to it, but how do you know what is good performance and what isn't? How do you know all the steps I didn't show in here of how to develop it? How do you do that correctly? How do you avoid over optimizing? I didn't use walk forward testing here, but should I have done out of sample testing? What happens when you do? What happens if you start trading this algo and it just starts going crazy bad, starts losing money? When do you quit? So there's a ton that I wasn't able to talk to in this video. But at least this gives you an idea of what an algo is, what it does, how it works, how you come up with one. And that's pretty much the intent of what I wanted to talk about here. The problem with algo trading is when you're starting out, you almost don't even know what you don't know, right? It's crazy that way. I experienced it when I started building my first algos way back when. It was called systematic trading. It was called mechanical trading. It wasn't called algo trading. Now it's called algo trading, but there was a lot I didn't know. And there really weren't a lot of resources to learn. Hopefully this video has been one resource to help you. So, one takeaway, if you're going to build an algo, don't do this. Don't call up a chart, insert the strategy, optimize it, and trade the results, the optimum results. Just don't do it. Unfortunately, that's what most people do. I've seen this over and over where people just optimize to death. So don't be one of those people, please. All right, so if you want to start, what do you do next? Well, first, you got to research platforms and brokers. Find a trading platform you can test with. Read some books on strategy development. There's a lot of good books out there. then, maybe you know enough to kind of go off. Maybe you need some advanced help, some advanced education. So if you do, hey, go out and get it. And then you start developing that first strategy. First one's always going to be the hardest. They do get easier over time. And once you do that first one, you just keep doing it over and over again. Pretty straightforward. Okay, so to wrap it up, hopefully algo trading is not still scary for you. It has good points. It also has bad points, so keep that in mind. It's not for everyone. And if you're going to do it, take the time to learn how to do it right. And finally, as I've said over and over again, it looks easy. Oh, simple strategy, no problem. But in reality, it's very hard to do. Okay, so if you have questions, you can leave them in the comment section, obviously. You can also send me an email, kdavey@kgtradingsystems.com. Just tell me you watch this video, you have a question, I'd love to answer you. Please subscribe to this channel if you haven't already. Go to my website, join my email list, and my motto is more likes means more videos. That means I create more the more times I see likes. So if you really like this video, give it a thumbs up. If people said, hey, I'm not giving you any likes, I wouldn't be making any videos, okay? You can see by all my past videos on my channel, I get a lot of people to like them because I think they bring some value. And I'd like to do more, but you've got to do your part, so help me out. All right, with that, I will say goodbye, and thanks for watching. I'm Champion Trader Kevin Davey. Have a great day.